Good morning and thanks so much for tuning in. You're watching Trade Talk on BK Prime. My name is Alex Matthew. Happy Friday to you and happy Friday to you, Hiral.
Good morning, Alex, and wish you the same as well.
Well, when you look at how the benchmark indices and the equity markets, in fact, in India have moved, I guess we spoke about this earlier in the week, that downgrade in the US seemed to be the excuse that investors in India needed to press the sell button to book a little profit because we were looking a little heated in our markets.
Absolutely. I mean, from a valuation perspective, yes. And the markets have been in an overbought territory, right? So there was some trigger that was absolutely needed. But what analysts are now pointing towards is that the moment we see this pressure continue for a few more sessions and we hit the previous highs, that was 18,887, from there, the bounce back that can be seen is going to be spectacular.
Yeah.
And this is something which we will be able to achieve, say, by Diwali. So, say, October, November is the timeline we should be tracking.
Very incidentally, yesterday at around this time, we were talking about 17,380 or thereabouts levels for the Nifty 50 that Dr. C.K. Narayan had pointed out when we had spoken to him day before yesterday.
18,315.
So,
Yeah.
No, it was 19,380. And that was the first swing low that he was talking about. And that's exactly almost where the Nifty 50 is currently at. And what he had pointed out is that it needs to break that mark decisively for that momentum to carry it forward. So that's one view. The other view is, of course, what you were pointing out is that we will move towards that previous high of 18,800 thereabouts, right?
Absolutely. And overall, if you see the kind of trend you've been witnessing also in the markets, it's 3 consecutive sessions where we've seen profit booking actually that has come in, in markets overall. It's mainly the weakness in the global markets that has actually triggered this kind of selling pressure as well and a collapse in the local markets. Overall, yes, Nifty is absolutely comfortably trading below the 20-day simple moving average. It's interesting to see how the VIX has actually moved from 10.28 to 11.19. And we've been talking about the FPI's long-short ratio. Now, that has gone below the 50% mark, and this is for the first time since the 12th of June, which clearly is indicating that the FPIs are holding more short positions versus long positions. And the recent weakness that we are seeing in the markets as well is expected to trigger liquidation of long positions, and the initiation of fresh short positions can actually drag the Nifty lower. So the F&O support, the market, the setup in the F&O market is absolutely supporting the fact in terms of what analysts are indicating of further pressure going ahead. Overall, if you go to see the highest put OI is seen at 19,400, whereas the highest call OI is seen at around 19,500. And if you talk about Bank Nifty as well, the next immediate support is coming in at around 43,400. So the setup is absolutely interesting. That sector rotation that's happening is what we need to watch out for, because clearly the last couple of trading sessions, Alex, we've seen the pharma pack that has come to the rescue, and that's where all the action lies.
Certainly, and it's in focus on account of earnings as well. And in fact, that's going to be the highlight of our show this morning as well. We're focusing in on Lupin and Sun Pharma at the start, and we'll also get a perspective on the sector as a whole. But let's get started with the earnings first. Monal is joining in to give you some perspective on those two results. One at least is a complete beat, right? So what can you tell us about those two?
Morning, Alex. Morning, Hiral. So Lupin reported its results last evening, and the revenue is up 29% to around 4,800 crores. Net profit of 452 crores against an estimated 258 crores. Quite a beat on that front. EBITDA up 422%. And it against the estimated 686, it's come to 856 crores. Margins at 17.8. Now, there's one thing here. There's a milestone payment which it has received, something that we'd spoken about on our show yesterday as well on the expectations. There's a margin payment. There's a one-time milestone payment which it has received to the extent of 205 crores on account of, it's from Abbey, on account of a completion of phase 1 of the clinical trial. Now, that is a one-off event. So if you exclude that, Antique Broking believes that, the margins have received a push because of that. And if you were to exclude that, they come down to 14% levels. So overall, while it's a beat again, and it's marginally above estimates, most of the estimates, there's slight bit of softness there because of the one-time payment. Also, this time, Lupin saw it getting aided by US launch of its generic version, which is under 180 days exclusivity. So that's been for Lupin. Now for Sun Pharma, the revenues have been up 11%, and it's a beat on all fronts, like we spoke of. Now, a couple of brokerages, especially Systematics, has said that there has been a strong performance in the EMs, especially Romania and Brazil, which is one of the new points that came out. US performance, of course, has seen a ramp up because of Revlimid. Also, there's strong performance led by lower expenses. They're having a great lineup of products in the US. So overall, Systematics, however, has downgraded the stock to hold, saying current limitations to the upside, current valuations. Jefferies has maintained its buy rating target price. It's revised it upside to 1,310 crores. Revenues, PAT beat estimates. India business grew 5%. Now, that was slightly softer. But however, they're expecting a double-digit revenue growth from FY23 to FY26, so they're positive. Motilal Oswal is also positive. Clinical progress to drive R&D expense on specialty front, and the others are almost similar in terms of niche US pipelines, which is in focus, and they're expecting a strong beat again.
So it's going to be an interesting one to watch out for as to how both the companies react and trade. Thank you, Mona, for getting us the details. But let's quickly welcome in Purvi Shah, Deputy VP Fundamental Research at Kotak Securities, to decode the pharma sector for us from here on, because the kind of movement and interest that we're seeing over the last couple of trading sessions is something which has caught everyone's eyes. Purvi, good morning and welcome to the show.
Good morning, Hiral.
Purvi, my first question coming to you is, clearly it seems that the sector cycle is undergoing a reversal, right? Does this actually tell you that there is a potential growth opportunity for investors from here on?
So, Hiral, of course, but we would suggest that it's better to be selective, because there are certain companies who really have a very good pipeline and launches that are planned very well. So we can see those growth coming in from this year and next year as well. So Cipla and Sun Pharma happens to be our top pick, and Cipla, we have a buy rating and the fair value is 1,230. And Sun Pharma, we have an ad rating and the fair value is 1,245. Both the stocks, we feel the numbers they've posted and the commentary that they've given is really positive.
Interesting. Purvi, Alex here. Over the last few months, at least the headlines that I have been reading, and you can correct me if I'm wrong, but I'm seeing a lot more observations, a lot more inspections that are being done by the US FDA, and more headlines that are pointing to work that needs to be done by Indian pharmaceutical companies to correct certain issues in the manufacturing process. Is that a significant headwind, according to you, something that could point to a downside for some of these names?
Yeah, so Alex, on the FDA front, see, that's a headwind which an investor cannot ignore or avoid, because it's something that you cannot predict what the outcome of an inspection can be. But so far, whatever we've tracked and we've realized over the years, that there are managements who really understand the intricacies of the inspection as well as compliance levels. So some of them have been very successfully clearing them. At some plants, of course, we've seen certain issues, but they are being addressed. And if we go back, say, 3 or 4 years ago, the intensity of the FDA letters was much high. I think so on the oral solid dosages, those plants, we feel they have, the Indian companies have, managed them very well. The issues that are coming are at the injectable side, which are supposed to be a little more sterile, and it's a little difficult given the tropical nature of the country. But so far, we've seen many companies have been successfully able to maintain the compliance level. So I would say at the moment, FDA is not that big a major headwind.
Hi, Purvi, Mona here. I have one question on the recent run-up that we've seen. So what has led to it?
Yes.
And do you believe that's sustainable? At least medium term, there seems to be a lot of talk about visibility of earnings. So how do you see it in the long term? Is it the right time to enter, or it's better to wait right now? And, given the earnings, does it mean that people who've missed the cycle should not now try to get onto the boat? What do you think?
So, Monal, I would say do not have that fear of missing out the FOMO. The stocks will give you the opportunity to enter at the right point of a time, because if you have seen the broader markets as well globally, there are a lot of events that are lined up in the upcoming few months. Like 10th August, we have the RBI policy meeting. In September, we have FOMC meeting. So the struggle to have the interest rate, inflation, and growth being balanced will give you a lot of opportunities in the markets to buy. So when it comes to pharma sector and the stocks that we speak of, if we see for the last 2 to 3 months, the entire sector has moved up quite well. Now, the reason being that there are two important things that have happened. In the Q4, most of the managements have said that, the benefit of cooling of the raw material prices, logistic costs, and the power and fuel will help the EBITDA margins in the upcoming quarters. So that's from Q1. So that we have been witnessing in a couple of companies' numbers. The other thing that has happened is that the price hike that the companies could take in the range of 10 to 12% is something that will come from effect in the Q2 significantly on the domestic businesses of each of the pharma company. So that's again going to drive the growth. Also, second quarter happens to be a seasonally strong quarter for the domestic businesses. So there are a lot of positives that are already built up, and because of which you have seen that a lot of companies have seen a run up. So I would suggest that for some companies, of course, the valuation looks a little expensive. So hold on, wait for the correction. When there is a correction because of the broader markets, please try to invest again.
Right. Purvi, my last question coming to you is, we've spoken about, where valuations can correct, where you see opportunity, but from a fundamental perspective, right, which are the pockets that are expected to be growth drivers from a business perspective? Because if you talk about the US market, the competitive intensity has gone down. With regards to price erosion, that has eased out. If you talk about even the CDMO side of the business, you're talking about the supply side issues. I mean, for you to answer whether that has eased out or not. So if you have to look at various pockets, where would the growth opportunities be? And in turn, what would you recommend as good buying opportunities?
So, Hiral, clearly the buying pockets or the growth drivers will be domestic business. We've been seeing a strong growth of 10 to 11% for the Indian pharma market for this fiscal year. Most of the companies are expected to grow above this IPM growth. That's 10 to 11%. We are seeing a lot of companies reporting a growth of 12 to 15%. So clearly, that's one of the pockets which is likely to grow well for most of the pharma companies. Like you likely pointed out on the US front, generic pricing erosion, of course, is very sticky, and it's high for a couple of players, and it's not there for certain players. Now, that depends completely on what is the approval rate that you have, and the second is the pipeline launches that you have. So if you are having these two things in place, I guess you are sorted for the US business as well. But when there are certain companies who have issues at their plants and the newer approvals don't come in, that's when they face a larger pricing erosion. So we feel, like I mentioned, our bets in the sector are Cipla, followed by Mankind and Sun Pharma.
Fantastic. I was just going to ask you to reiterate that, so I'm glad that you did. Thank you so much for taking the time. Pleasure speaking with you, Purvi, and I'm sure a lot of our viewers have benefited. Yeah. All right, and Monal as well. Thank you so much for joining us and giving us that perspective. We are focusing on earnings and continue to do so. Dabur is the next counter that we want to focus in on. And perhaps to a certain extent, here, the thunder of the earnings got stolen a little bit, or rather, I should say that the focus of the earnings got shifted to allegations of carcinogenic elements in their honey. So we'll have to ask Sesa what she has to say.
But that news was not able to really push the stock down. Yeah. In spite of it trading under pressure, we did see a good recovery that did come in, and it was during the day seeing cuts of around 1%, 1.5%.
Yes. So, and I believe that the company has also clarified on that news item. Sesa is joining in to give us some perspective on the numbers, and also Sesa to tell us about what the company says about Dabur Honey. What do you have for us? Good morning.
Hi, morning, Alex. So, first I'll start with the numbers. So, of the 50 analysts tracking the company, we have seen 30 have a buy rating, 14 suggest a hold, and 2 of them they recommend a sell. This is according to the Bloomberg data. Now, the volume growth has come in at 3%. This was lower than expected. However, the overall operating performance has been in line. Now, the volume growth was mainly impacted because of the lower offtake that we have seen in the beverages category because of unseasonal rains, and that we had spoken about it in the last call as well. So, but excluding the beverages category, the analysts pegged the volume growth at 5 to 6%, which is quite decent. Now, coming to gross margins, it has expanded by 74 basis points over the previous year. This was due to the softening in input cost inflation. And the company has reinvested these gains towards higher ads and promotions, which further reinforces Dabur's goal of gaining market share across categories, with focus on portfolio expansion to drive growth. The management has guided for improved gross margins for subsequent quarters. They've also guided for a high single-digit to low double-digit growth for healthcare business, and they are also targeting a double-digit growth in the oral care for FY24. The overall capex planned for FY24 is around 400 to 450 crore. Now, they're also considering acquiring D2C brands given that they are financially worthwhile. So most analysts, they strongly believe in Dabur's potential for healthy top-line growth. This would be driven by a double-digit growth in the healthcare as well as their personal care businesses. However, analysts are pointing to a slowdown in rural demand due to lower government spending or a monsoon failure that could impact revenues significantly. We need to track the space. Now, on the honey issue, Dabur has clearly mentioned that their honey stands for purity, and they are in compliance with all the FSSI norms and manufactured at the US FDA facilities. So every batch is tested on 65 parameters on FSSI. So there is nothing to worry on that front. Is that what the Dabur management has indicated?
Thanks, Sesa, for getting us the details. An interesting point that you pointed out with regards to where a rural slowdown that could be on the cards. So that's going to be an important aspect that we could be tracking from here on to understand the trend going ahead. Thank you so much for getting us the details. But moving on, from the consumption pack to the telecom space, you have a Bharti Airtel that reported numbers. A slightly mixed set of numbers. Concerns coming in terms of the African markets. Himanshu standing by to get us more in terms of how the quarter has been. Himanshu, good morning.
Hi, good morning, Hiral. So Airtel released its results yesterday, and they were very highly anticipated ones in the backdrop of Jio Bharat launch as well as the regulator releasing their report for the month of May. Overall, the revenues were largely in line, but the PAT estimates were a miss by largely about 41%. This was primarily because of the one-time foreign exchange loss incurred in the Nigerian market to the tune of roughly 3,400 crores. It was a result of the currency being devalued in the country following a slew of policies rolled out by the new president. Airtel's India business continues to be the foundation of its overall business, but the company also has its subsidiary in Africa, which operates in various countries in that region, along with a strategic partner in Singapore, as well as operations in South Asia. All of these which are key in its overall business performance. So customer base growth was highest in Africa, noting a 9% uptick over the past year, followed by India and then the South Asian market. The South Asia mobile services surprised by showing a growth of almost 20%, but the other segments were largely in line with estimates. Now, speaking about the average revenue per user, which is a very critical measure for these telecom companies, Airtel touched the rupees 200 mark for the first time since the first quarter of financial year 2014. As per reports, Reliance Jio, with the highest subscribers, is at 180.5 per user, while Vodafone Idea is at a distant 135 per user. As per the last, and Vodafone Idea's number are as per the last fourth quarter numbers. So last year, the management had indicated that in order for the business to be sustainable, Airtel would like to attain the rupees 300 revenue per user mark in the coming 5 years. So the margins, speaking of margins, they have noted a gradual improvement over the past quarters despite stiff competition on the back of increasing premiumization and rural penetration. Majority of the customer additions were from the tier 2 and tier 3 segments. And now speaking about the segment performance, Airtel Business, Home Business and Digital TV were largely in line, growing in the range of about 15 to 25% year on year. And another key point to remember is that Airtel is looking at debt repayments of around 30,000 crores in the next 12 months, which is about 36% of their overall, total debt outstanding. And it's also important to know that it's over double of its cash reserves as of the balance reported on March 31st. The stock is down 0.73% as of yesterday, but it's up 7% year to date. So it'll be interesting to see how Airtel.
Thanks so much,
plays
Hemant,
along. Yeah.
for bringing us those updates. Airtel is one stock to watch out for. Aisha is another stock that you want to keep very close watch on, because the stock has, or rather the company has posted quite a set of numbers. Vinay is joining in to get us some of those details. Vinay, a big beat on the profit front. What can you tell us about the fine print?
Thanks, Alex. So the company seems to be growing from strength to strength. The net profit in the quarter jumped 50% to 918 crores. And remember that this is highest ever quarterly revenue, EBITDA, and profit for the company. And this is best ever performance by the company for the fourth consecutive quarter. So every time they are reporting their numbers for a quarter in the last 4 quarters, they are bettering their record in the last quarter. So the Royal Enfield sales grew 22% and the commercial vehicle sales grew 12%. So you can see the impact on both EBITDA revenue as well as the net profit. The EBITDA margin also surprised on the upside, and the impact of Hunter 350 as was expected was not as much, because the softening of the commodity prices made up for the margin contraction on that front. So the interesting part that we were all waiting for, the MD of the company passionately defended the brand Royal Enfield, saying that they have built a fortress which is not easy to penetrate. This seems to be a reply to the comment by Rajiv Bajaj that was saying that that if Royal Enfield is where the money is, they have no option but to rob the bank. So whether the competition will be able to rob the bank, it seems that it will be answered in the future.
Thanks, Vinay, for getting us that perspective. That's an interesting one to watch out for from here on. But moving on, a lot of other earnings that have been reported. I think we're going to quickly take you through all of them. Varsha is standing by with a list that she's been capturing. Varsha.
Good morning. So we've got a number of companies. So first there's Deepak Nitrite. So the numbers were below estimates. Now the top line performance was impacted due to industry-wide challenges linked to inventory destocking and slowdown in EU and other markets. Also, PAT was further impacted in Q1 due to same again destocking. Now, company is actually working on products which will be import substitute products, for which company has done MOU with Government of Gujarat, which will involve capex of around 5,000 crores. The next company that we have is Yasho Industries. So revenues were down 15%, while net profit was also down 23%. Though there was volume growth of 6%, but low realization, high cost inventory were the reasons for the degrowth in revenue. Company's greenfield project in Pakistan is progressing as planned and is expected to commence production in early FY25. The next company that we have is Radico Khaitan. Now, the company grew above its guidance of 15 to 18% with improvement in sequential margins, which has been sustained on year. Now, this was aided by strong efforts on driving premium value growth, price increase received over the last 4 quarters, supported by easing of inflation. Now, the last company that we have is Venus Pipes and Tubes. Now, company has posted really good numbers. The revenues were up 58%, net profit was up 91%. Now, the reason for good numbers is the revenues from seamless pipes grew almost 150% year on year, and also company has is tripling its capacity with backward integration for the same.
All right, thanks so much, Varsha, for that. Now, speaking of earnings, and I'm getting hungry, so I'm thinking of breakfast already, and we're ordering in, so we'll have to figure that out. But the stock that you want to watch out for, of course, on that front is also Zomato. The fact that it posted profits is something that will be focused on. But remember, this is PAT, profit after tax, operationally still questions about whether they're making money.
Absolutely.
So let's go to Mihika. Mihika, what can you tell us about the earnings?
Yes, so Zomato beat Bloomberg estimates in terms of revenue, the consolidated PAT, and the EBITDA. The EBITDA stood at 48 crores versus the estimate of 180 crores, while revenue saw a 70% jump. Jefferies maintains a buy rating on Zomato and revises its price target upwards to 130, considering that the company has achieved a milestone of adjusted EBITDA and consolidated PAT positive way earlier than the guidance. Jefferies has put rest to all of its concerns around Zomato's ability to make profits. Morgan Stanley remains overweight too, with a target price of 85 rupees. The company is expected to remain positive after a strong quarter for growth and profitably, says the brokerage. This quarter saw strong performance in core business. However, the quick commerce business disappointed in terms of performance. I also have some other stocks that I've been tracking in terms of revenue. First, we have Adani Power, which saw a positive double-digit revenue and EBITDA growth. The company also recorded an 88% net profit increase, and margins also increased by 278 basis points. Then we have Gulf Oil Lubricants, which saw 14% revenue growth and a 23% net profit growth. The EBITDA numbers increased, however, the margins decreased to 11.43% from a previous 12%. Then we have Mahanagar Gas, which saw 5% growth in revenue, with net profits up by 98%, and EBITDA was also up by 82%. The margins also increased by 14.27 percentage points to 33.9%. Then we have KC International, which saw positive revenue, net profit, and EBITDA growth and margin improvement. The company saw healthy growth in the transmission and distribution and civil businesses. The company's order book increased 30% year on year to 4,500 crores, with order intake that was led by railways, civil, and transmission and distribution. Then we have JM Financial that saw 35% revenue growth. However, net profits were down 11%. The net interest margins fell to 6%, while the net NPA remained stable at 2.3%. The gross loan book was also up 26% to 15,891 crores. And lastly, we have LIC Housing Finance that saw both a revenue and net profit growth of 28 and 43% respectively. The interest margins improved to 3.21% from a previous 2.51%, and the loan disbursements stood at 10,856 crores this quarter, which is lesser than the one recorded in the year ago period.
Thanks, Mika, for getting us. So it's a whole host of stocks that will be in focus on the back of reviews. But you have M&M from the Auto Pack that will be reporting numbers, an interesting one to watch out for, because in the month of July itself, it's recorded the highest ever sales. And you have Temasek, which is now looking to invest in the M&M electric, segment. So let's see how that pans out overall. But we again have Vinay back with us to take us through the key expectations. Vinay, over to you.
So, Bloomberg's consensus estimate suggests that the profit is likely to jump 36% to 1949 crores. And this is mostly on the back of a good, strong auto business, because the auto business, the volumes there grew 21% in the quarter, but the tractor sales were down 3%. So, that could be something that analysts will watch out for and investors will watch out for. Higher prices, stable commodity prices, and higher scale of operations may have improved margins to 13.1% in the quarter from 11.9% last time. And the commentary will be awaited on the new investor that is coming for their electric vehicle subsidiary, where they will be making SUVs for the future. So Singapore-based investment firm Temasek has come in after the British company that has invested earlier. The valuation with this new investment has jumped 15%, and more will be awaited by what the management has to say about the new investment and how it will scale up their business in the EV front. Back to you, Hiral.
Thanks so much, Vinay, for bringing us those details, and we'll touch base with you once those results are out. The other big earnings to watch today, and in fact, it is a headline, State Bank of India. And I'm sure that a lot of investors will be watching very closely to see what the kind of growth is in the loan book, as well as whether or not NIMs are maintained. Vishwanath Nair is joining us to give us some perspective there. Vishy, good morning. What are the key numbers to watch here for SBI?
Good morning, Alex. So as far as SBI is concerned, of course, profitability is a big pointer to look at because over the last fiscal, we've seen net profit hitting record targets every quarter. This quarter, again, there's going to be an estimated 146% rise in net profitability. Net profit is estimated at about 14,948 odd crore, according to what Bloomberg analysts have estimated. It's rising year on year, but there's expected to be a dip quarter on quarter. So that will be one thing to watch out for. The other thing is, of course, as you said, the loan growth. There's a expected 15 to 17% loan growth target from the market. The bank has been a little more sober, saying that it will probably be in the early teens for the full financial year. So that's something that we have to watch out for. NIMs are likely to decline because deposit repricing takes a little while longer than loan repricing does. So that will come in during the first quarter and the second quarter, where all the deposits get repriced, and therefore your NIM starts to shrink a little bit. So that's what's expected from SBI for Q1.
Thank you for getting us the details. The stock is down almost around 4% in the last 5 trading sessions. So let's see if the earnings are able to cheer it up as well. But moving on, a whole host of other stocks that are in focus in today's session, on the back of news. Saloni is standing by to get us more. Saloni, good morning. What do you have?
First, we've got NBCC. So the company received an order worth rupees 301 crore for the construction of a hostel cum residential block at the University of Delhi. Next, we've got Torrent Pharma. So the company, through its subsidiary Torrent Urja 8, entered into a power transfer agreement with subsidiaries of Shapurji Palonji and Company for the supply of 132 megawatt solar power for its desalination plants in Gujarat. The estimated cost for this project is rupees 700 crores. Then we've got SJVN. So the company inked an MOU with Sikkim Urja to trade 180 megawatts hydropower from Sikkim Urja's 1,200 megawatts hydroelectric project in Sikkim to distribution licensees and open access consumers. Then we have Hatsun Agro Product. So the company inaugurated its chocolate manufacturing unit with a manufacturing capacity of up to 7,000 kgs of chocolate per day. The commercial production went into effect as of yesterday. And lastly, we've got news on NSDL. So NSDL has filed its DRHP for its IPO with SEBI on July 7. So SEBI has now put NSDL's proposed IPO in abeyance. This is a rupees 3,000 crore IPO and a lot riding on it for institutions like IDBI Bank, Union Bank of India, SBI, etc.
All right, thanks so much for that, Saloni. Well, we've clearly got a lot that we've covered over the course of the last half an hour or so, and there's lots more to talk about over the course of the day. You'll find all of that live on BQ Prime, so do stay tuned.